Welcome to TradeTheNBA.com. This is John's report is for the 30th of September. We're going to end the month, just a little bit below the peaks that took place before. Not all that shocking. We got a slight move of magenta over yellow, so it's still maintaining positive. You can see shorts have been rising in this. And what I suspect is going to start to build is we'll see that NBI white continuing to rise, even if magenta is over, and even if you make new highs with new fund money coming in at the beginning of the month, it's going to be under a significant short increase, and we'll be watching the histogram. We got a previous build right here that took you all the way up to 19. This shakeout is going to have to match that reading or exceed it when the new highs are reached. And if it doesn't, that's going to be an ugly scenario with the government shutdown. I don't see that as ending relatively quickly, because what's the incentive for Democrats to make a deal? None. They need to have people have a negative perception of Republicans and handling the government, and this is their way to do that as we get into next year. So, Republicans are going to claim, that's going to be the narrative situation. Will the argument that the Republicans stopping Democrats from wanting to provide health care for illegals be the narrative that plays out, or will it be, that Democrats say that Republicans are just trying to cut Social Security and all the other usual things that they've said forever and ever? So those are going to be the battle lines. It doesn't really matter overall, but from a political incentive, is there really any interest for the Democrats to approve a budget? Not really. Not unless their communities rise up and say, hey, we're suffering. But that's going to take a little bit of time. From an NQ standpoint, a little bit less dramatic than the S&P readings, but same situation with the shakeout. It's a bit stronger from that standpoint, but I think you're going to see that build into the beginning of the month. The Fed is zero help whatsoever. And again, this is that delay that you're seeing between the tiny quarter point doesn't do anything. It's not going to help real estate or anything like that. And that strain, it takes a lot longer from the inflation that took place to where things have stabilized from price for the consumer to be able to match it. The earliest part would be the second quarter of next year before that would be assimilated. And you're starting to see that here, where I've talked about this, where 60, this bottom 60 number being the new baseline of 40 was during Trump's for oil as a minimum point, with the rising costs and everything for production, and that, is this the new baseline? So that if you get a dip below this point, well, now you're making energy sector suffer. And then it becomes a question of, is that dip related to the fact that you have just lower economic activity with a production level that's already set? They really can't adjust their production level that fast. As far as a reduction in that, they're already going to be producing, and they still need to pay their bills. So you end up with a cycle that drives things much lower than they would normally go, until some producers are just wiped out. But that takes months. So, but that becomes also a fuel for added growth. We haven't reached those points at this particular stage yet, but you're getting close to that precipice at this particular stage, and that will have a profound dynamic on how the growth goes. But it's only going to work if interest rates come down enough to match the inflation that took place for people to be able to justify home purchases and those kinds of things, as well as business being able to refinance at reasonable rates. And that isn't the place right now. So that's problematic. So if you don't already have a good balance sheet with a lot of cash, you're in trouble, plain and simple. And of course, with the euro and all these other ones, the broader, economic interests are still betting on a U.S. collapse. So that's the narrative. That's why you see these things where it is. There's no justification for a euro at this level, given where their economic activity is, unless they're betting on the U.S. imploding completely. And if you hear those construction noises, they're building scaffolding outside of our 13th century palazzo here to redo the edifice to be restored to its glory of the late 1300s, when my place was first built. From a gold standpoint, yeah, but some of this is related to GDP relative to debt, but a lot of it is also related to the change in tier capital requirements, where banks can now hold gold instead of treasuries, far smarter than holding a treasury to hold gold, because at least at that particular point, as the erosion of currency goes, you're not eroded when you have the gold. And so in this particular case, you've got a double whammy taking place. You have the debasement of currency, but then you also have the change as well as governments around the world, all trying to acquire gold because they all know they're in the exact same boat where they're not stopping their spending. Their debt to GDP is rising. They're going to get ever decreasing growth because of the amount of debt they're carrying. I mean, these are not, debatable economic realities. It's well known. So it's just a matter of the degree to which it impacts broadly. And you're still going to see crypto and them do very well within this. BTC has suffered a little bit because of the large whales shifting to ETH, and that's caused a little bit of disruption. But broadly, again, it still becomes an inflationary hedge against where currencies are. And ETH, you can see, doing far better, relatively speaking, than BTC. And that's just because of the rotation. That's all it was. It's just a rotation. And when we look at it from an intraday 50K, we had the early morning bump that was on positive extremes down here. So you knew those were going to get filled. And it was just a matter of once the magenta broke below the 25, DOC spread at the same time. It was a clear short signal. Now, all it did was fill the positive extreme. So it wasn't strong enough to actually drive you to the 50%, which shows that there was enough buying taking place during the short selling to still contain things. But we still have MBI white leading, magenta still above, so it's enough to hold it for now. But any breakdown of magenta below yellow at that particular point, you're looking at the 50% easy, if not more. So will new fund money be able to hold things up going into the beginning of the year? We'll see. I think that maybe it lasts for the first week, but after that, I think things start to get rocky, and particularly if they don't agree to a settlement on the budget. They're looking for Trump to cave. They need some kind of win, so that's what they really want to be able to say, is that they made him cave. We'll see if he's going to do that or not, because from their standpoint, I don't know that a government shutdown is all that horrible, other than it just makes them look bad, and that's the optics of politics. So from an intraday 5-minute, you can see we tried to get back up to the peak of the pre-market, didn't work, and then that led to broader sell-off and a little bit of an attempted recovery just to cut away some of the value in those puts. But as you can see from the European session, it's already wiped that late move intraday. But I think that you're going to continue to see some difficult times ahead, and I think October is going to be particularly volatile going through, and maybe I think a lot of people aren't expecting it. You have the skies falling crowd, you have the exuberant crowd, and then you're going to have reality that fits right in between that, and that's just going to be a lot of uncertainty. The greater the uncertainty, the wider the ranges. Just be ready for it. Indicators have gone out for October, so we're all set to go and ready for it. As always, trade well. Have a good one.